Welcome to BizTech's CEO Conversation Show. Today we speak to KK Fund, a venture capitalist out of Singapore that invests in companies in Southeast Asia, Hong Kong, and Taiwan. Now with us is Koichi Saito, founder and general partner of KK Fund. Koichi-san, welcome to the show.
Hi, thank you for inviting me.
Now, Koichi, let's start by giving us an overview of KK Fund.
Sure. KK Fund is Singapore-based VC fund, and we focus on early-stage investment in Southeast Asia. Since 2015, we have been running 2 funds and invested in 25 companies so far.
So you've been running 2 funds, okay?
That's right.
Could you?
One is a 2015 vintage, and then second one is 2017.
2017, I see. And what is your investment mandate for each of those funds? And what sort of companies do you typically invest in?
Okay, from Fund 1, we typically invest in the online marketplace and also e-commerce business model. And, at that time, it's, like 7 years ago, that was a quite hot space and also white space as well.
Okay.
And then from Fund 2, we invest in a quite diverse business model, right? Such as healthcare, fintech, prop tech, HR tech, and even esports company as well. So it's quite diverse business model.
Okay, and generally, in Fund 1, for example, was that, what stage would you invest in Fund 1? What are those companies? And how about in Fund 2?
Okay, Fund 1, seed stage, and also Fund 2 as well, seed stage. But we did, some follow-on investment in the Series A.
Okay.
Yep.
Okay, and what is the typical ticket size for each of your investments?
So typical ticket size is $500K US dollar.
Okay.
Yeah, but some company raise only, $300K, $400K.
Okay.
In that time, yes, we invest only $300K, $400K. But usual ticket size $500K US dollar.
Okay, and how about because Fund 1 has been around 7-8 years already, 7 years already.
7 years, right?
Yeah. Are you fully invested in that fund already?
Yes, we have done already.
Okay, and do you have some success stories that you could perhaps share with us in terms of exits or?
Yeah, sure. I mean, so we haven't done any full exit yet because the company has been still growing, but we did some partial exit to one with private equity fund, the other VC fund, and also corporates.
Okay, and what sort of returns did you get out of those?
Oh, well, we are not allowed to disclose the number, but quite good amount, and our investor are still happy about it and expecting more return from the rest of the shares.
Okay, and typically in terms of your investor mandate, what are you looking for in terms of returns overall from the fund in Fund 1 and Fund 2?
Fund and Fund 2, usually, I'm talking in general, usually the VC fund LPs expecting 3 to 5x return.
Yeah.
And IRR is really depending on the investor actually. If it's the family office or institutional investor, maybe they require higher IRR, like at least 25% or so. But if it's corporate, I mean, most of our LPs are corporate, so they are looking at the strategic, angle. So they like to do the alliance partnership investment in the Southeast Asia through our fund. In that sense, they do not really care about IRR. Of course, they need a minimum, some multiple, but their angle is more for strategic.
Okay, and that's very interesting. That's very interesting because they have a twofold reason for investing, parking money with you, some of your LPs. Could you share some of the names of your LPs?
Sure. Okay, one of the investor is Sega Sammy Holdings. The gaming Sega is Sonic.
Yes, that's right. Yes.
I think most of everyone knows. And so they are also exploring the business in Southeast Asia, of course. Their main market in of course Japan, and some of the gaming title are quite popular in the US,
Mhm.
but not really in Southeast Asia. So they are looking for exploring the seeds of the innovation through our fund. So we have a frequent conversation with them, like monthly basis,
I see.
and sharing the information about the startup and then what's going on here in Southeast Asia, so on. And the other example called Seputeni is a public, listed company in Japan. Their main business is online advertisement.
Okay.
So they actually, same thing. They are looking for the business here, Southeast Asia. In fact, they acquired. It's called Lion and Lion. It's Malaysian ad agency
Yes,
actually.
that's right.
Yeah,
Yeah.
they acquired that for their future business. Yeah, the land here. So yeah, I mean that's the two example. And yeah, even 110 years printing company from Japan also invested in us.
Okay.
And they are also trying to get out from the traditional printing business
Okay.
and getting into the digital the business in Southeast Asia. So we have a lot of the corporate investor.
Okay. And Koichi, that is a very interesting strategy. It is
Mhm.
a very low cost way to learn
Mhm.
about market. So if you're saying that you are giving them, you're talking to them on a monthly basis, you're
Mhm.
literally their eyes and ears on the ground.
Yeah, right. I mean, yeah, this is I believe it's good for them, right? I mean,
Yes.
if right, let's say they invest $2 million,
Yeah.
$3 million, and then management fee is 2%. So
Yeah.
literally, they can hire us like for 40 to 60K US dollar
Yeah.
at a monthly basis. So I think yeah, good for them too.
Yeah. It's a very good. It's really a win-win situation for both sides. And,
Right.
and could you and this was part of a broader strategy of Japanese companies a few years ago, really starting to come into Southeast Asia. In some cases, very early on seeing the potential of the 600 over million people in Southeast Asia and then
Mhm.
start doing a very low risk strategy like this to start to build bridges with Southeast Asia.
Mhm. Right.
Now, can you give us some insights into your portfolio company,
Mhm.
particularly in Malaysia, perhaps?
Mhm. I
Some of the
mean,
ones you've invested in Fund 1 and Fund 2.
yeah, so from Fund 1, we invested in the Cowdim, which is number one online service marketplace in Southeast
Okay.
Asia. And back then in 2015 and 16, after we invested in the Cowdim, I mean, a lot of the same business model came up, and
Okay.
then the market became a red ocean.
Okay.
But still Cowdim is one of the survivor. And I think there are only a few, like 2 to 3 player in Southeast Asia.
Mhm.
And definitely the Cowdim is the number one. And then they expanded to 3 other countries from Malaysia, which is
Okay.
Singapore, Indonesia, and Philippines. And same Lorry.com, of course, on-demand logistics company,
Yeah.
tracking traffic in Malaysia, also expanded into the 3 other countries, Singapore, Indonesia, and Thailand. So yes, I think the key success is, the regional expansion, especially for the Malaysian or Singaporean or maybe I could say Thai startups,
Okay.
because their home country is relatively small.
Yeah.
Yes, they're, I mean, lucky for them, Indonesian companies, they can be a unicorn if, they
But
conquer,
yeah,
dominate, their home country.
correct.
But for Malaysia, it's different story.
Yeah, 30 million too small.
That's right.
Now, but okay, so it's interesting. We are a small market in Malaysia. Malaysia is a very small market,
Mhm.
but you've identified Malaysia as one of the key markets for your investments. Can you share with us why you did that when you were starting your fund?
Sure, sure, sure. I believe, I mean, we invest in the founder anyway. I mean, you know, because of our nature of our, you know, investment style, which is early stage investment. So we look at the founder carefully, and I'm not saying that to for the other countries founder, but I think Malaysian founder is, you know, for me, one of the best. You know, they have a quality among the Southeast Asia.
Why? What are the qualities that you say are one of them?
No, it's everything concerning communication, the way of the you know, they're doing business and so on, and they also have a global mindset, of course, from the day one. They always wanted to expand into other country, which is also very attractive for me.
Okay.
And I think because this is just my hunch, I just assume Malaysia has a multicultural, you know, thing, right? Multicultural, you know, country. You have a Malay, Chinese, and Indian, and so on. So I think they are get used to work with other, you know, races, countries. So maybe for them relatively easier. And you know, if you look at the Grab and, you know, success story, Grab and, you know, Job Street, you know, and iFlix and so on, they're also successfully expanded into the other country as well.
Yes.
But unfortunately, maybe for the Malaysian founder, they are also overlooked, underappreciated compared
Okay.
to Indonesia. So valuation is relatively lower, maybe similar to Thai market. But
Okay.
once they go out, I mean, they expand into the other countries, valuation, you know, the goes up. The growth rate of the valuation is much higher than other country, of course.
Okay. So you're doing a smart bet then. You're going where there's value. Malaysia is what I hear from you is also Malaysia is gives you a better value in terms of lower valuation, and also the founders that understand that you know, they have to get out.
That's right. But it's not easy, of course, right?
Yes.
Yes.
One of the things is also deal flow, right? Do you think that Malaysia gives you enough deal flow?
Yes, we have. We have still. We always get an introduction from my founder's friend in
Okay.
Malaysia. So deal flow wise, I don't have any problem. But of course, from there, we have to find, you know, the best founder who have a capability to manage other countries, you know, market. So
Now,
is
Koichi, one of the things is also the fact that you have got a couple of key partnerships in Malaysia. You've been here for a few years, so obviously you understand the landscape well. You've invested in a few companies. So I want to talk about two key partnerships that you have, and maybe you can elaborate on that. One is with MDEC, and the other one is with the Sunway Group via your Sunsea Capital Fund. Could you tell us more about that?
Sure, sure. So MDEC, no, we always work with them, you know, because of the deal flow, and also, you know, we you know, co-organize some of the events. I mean, online, you know, virtual meetup event for the startup, and so they are always, you know, center of the ecosystem in Malaysia. So sometimes, you know, they introduce me to the, you know, Malaysian corporate or even Japanese corporate who like to enter Southeast Asia, Malaysia.
Okay.
So, I mean, BC's job, right? You know, our job is not only investing. We do everything, right? Communicate with, you know, so many, you know, the stakeholder, not only startup, BC, investor, accelerator, sometimes government, corporate. So MDEC has so many associations with any players in Malaysia. So I mean, I really appreciate the partnership with MDEC.
And where do you see and how about Sunway itself? You've you're co-invested in a fund with Sunway.
Yes, so Sunway Group, right? Of course, they are also exploring at the time the digitalization, revitalize their existing business. Of course, I mean, you know, they have a strong business foundation from the offline basis, of course, property, shopping mall, I mean, retail business, even university healthcare.
Yeah.
But you know, similar to other conglomerate, you know, they feel like they have to go in digital for themselves. And they are also looking for the synergy of the Sunway Group. So we are more for the advisory position for them, and then we are giving a deal sourcing and which could be synergy with the Sunway Group, and also we supported the fund setup, the foundation for the Sunseed Capital as well.
So that's a 50 million US fund. Do you have a stake in
That's
that?
right. We cannot disclose the detail of the
Okay.
the partnership stuff.
Okay.
But I would one thing I would say is we found it together, and also we are also the advisor of them.
Okay. And
Yep.
where do you see now the opportunities to bridge? Because what was very interesting earlier, which you mentioned, facilitating corporates as their eyes and ears on the ground in Southeast Asia. Now you've
Right.
also done. I think you've got you're an advisor to one-on-one co-working space in Singapore. That's supposed
That's right. Yes, that's similar stuff actually.
Okay.
Yes, very similar purpose.
Okay.
So yeah, the co-working space is managed by Japanese company.
All right.
One and call, and then one and call also the what do you call? Yeah, they got a business from the Japan Rail company,
Okay.
which is traditional company, but they also like to get into the digital space. And since a Japanese company manage that space, a lot of actually tenants are also from Japan,
Okay.
and most of them are large corporates and who are looking for the innovation here.
Okay.
And I became an advisor to facilitate between startup here and also the large corporate, especially from Japan.
So Koichi, do you see this trend accelerating? Because after all, Japan has a declining population, and Japanese companies, especially those who traditionally depend only on Japanese market, have already started looking out many years ago. Do you see that trend accelerating? And what role do you want to? How do you want to position yourself to take advantage of it?
Yeah, sure. I mean, this is actually the rationale of why I started the KK fund actually. Right. So since 2013, so I landed in Singapore in 2013, and then I clearly realized that there is some gap between Japanese or even Korean company and startups here. So in startup here, especially of course there's a lack of the capital comparing with of course Silicon Valley or Japan and China. So obviously there's a lack of money. They need a capital here. But on the other hand, Japanese Korean company, of course their market are becoming saturated, and they are looking for other country. And yes, so Southeast Asian market, digital market, get a eye, catch the eye from the large corporate from Japan. So I thought, okay, that would be, I would be the bridge between Southeast Asia and Japan and Korea, or even Taiwanese company as well. So that's our rationale. And yeah, since back then, I think, I mean, if you look at our LP's investment here, Japanese LP and even Korean investor, Korean corporate, they are starting to invest in here, Southeast Asia. So yes, I believe a lot of money, from Korea and Japan and Taiwan are flooding into here. But always the Chinese company are ahead.
Yes.
They are quite nimble. They're fast. So yes, they are using Lazada, let's say, also the C, what do you call it? So Garena, right?
Yes.
So they use them as a, we call it Trojan horse. So they invest in them, they use them, and then expand it to their hometown business in Southeast Asia. So it's very smart and quite fast. So comparing with Chinese, giant company, still, Japanese and Korean are behind, but we are still trying to accelerate the digitalization in Southeast Asia.
And which brings me to a very good point, because now the flavor of the month, or the markets that are in favor, are really Indonesia, and particularly Indonesia, but also Vietnam.
Yeah,
Now,
right.
do you see that there's going to be a change in investing patterns moving forward, or in fact, more of them are going to then focus on these two markets?
Indonesia, I think, yeah, still, they're getting attention from global market. So yeah, I mean, think in that way. So if you're the large P fund or whatever, large corporate from the US, China, and other Europe country, but if you think about Southeast Asia, you think about Indonesia first because of the GDP growth and population, and also you see the population pyramid, the shape of the pyramid. So younger people, more younger people there. So anyway, Indonesia will be the number one company. So yeah, I think the Indonesia is still getting the attention from the even especially outside Southeast Asia.
So Koichi, so here is a problem, because for entrepreneurs in Malaysia, and Malaysia was a few years ago ahead of the curve. Now we are behind the curve. So what do you think that needs to be done in order to make Malaysia, as you said, Malaysia has a lot of advantages, lower valuations, good infrastructure, the entrepreneurs, you like the entrepreneurs that you've met in Malaysia. So what are we doing wrong?
Yeah, again, the key is the regional expansion. They have to conquer a whole Southeast Asian market, like Grab or Jobstreet, iFlix, and so on. Otherwise, if they stay in their home country, only Malaysia, they never get attention, unfortunately.
Yeah.
And I really understand their difficulty, because once they grab seed funding, like 500K, 300K, they cannot go out, outside Malaysia with only 300K to 500K.
Correct. You've just got to build home market that's enough.
Most likely, 95 of the startup, they stay in Malaysia. Then when they fundraise at the Series A, right? Then what's the problem? Okay, so those startups who are staying in Malaysia, only Malaysia, they are not really attractive for the global investor.
Correct.
From Singapore or other. So they have to depend on the local capital, which are the most believer of the Malaysian market, of course, right?
Yes.
So we have to get access to the capital in Malaysia. But again, unfortunately, not much capital in Malaysia yet. I mean, I understand, now the Penjana capital are,
That's right. That's 1.5 billion or 1.8 billion.
That's right.
So that's for the first time, really substantial amount of money in the Malaysian tech ecosystem.
So yes, hopefully, yes, either not only the government fund, also local conglomerate or local corporate or independent VC fund. I really hope the number coming up in the future, and then grab the Series A capital from there, like 2 to 3 million US, then go out to the other South Asian country. And in that case, most likely we can get access to the capital in Singapore or even other country, actually even from the US, Japan, and so on. So again, key is regional expansion.
Regional expansion. So in fact, I'm good. And it's linked to my final question.
Sure.
If you have 3 pieces of advice that you want to give to startup founders, particularly in Malaysia, especially now given the shift in consumer patterns and so forth, what advice would you give, and where do you see the opportunities?
Okay. Okay, actually, I've seen many opportunity in B2B space right now,
Mhm.
especially, I think, unlike other countries like Thailand, for example,
Okay.
B2B business for startup are relatively easier because of the corporate attitude. So always in Thailand, large corporate are willing to do the partnership with startup and also trying to use their products.
Oh, interesting.
So
Okay.
sales cycle was actually much shorter
Okay.
comparing, in Thailand. And Singapore, of course, the corporate understand the stuff. So now I think because of the COVID situation, all the Malaysian SME and large corporate were forced to use that, get into the digital space. So I think there is an opportunity for the B2B startup now to approach even the large corporates
Mhm.
for selling their product, digital product. And of course, as you can imagine, B2B business, they don't suck much money comparing with the B2C business.
Yes.
So yes, once they grab the funding by 500K, 1 million US dollar, they might be able to go expand into other Southeast Asian country as well with a limited, capital as well. But I believe still they need a substantial Series A funding. But yeah, even after seed stage funding, some of them now, could go, beyond Malaysian market. So I see the opportunity in the B2B space right now.
So your advice is B2B space, there's opportunities.
Mm-hmm.
Of course, go regional as
Mm-hmm.
quickly as you
Yes,
can.
right.
And then any other piece of advice that you would be able to offer?
Mm. Yeah, again, be ready for the Series A funding. Yeah, the founder, right after seed stage funding,
Mhm.
actually they have to go ahead to talk to the all local BCs, corporates, even corporate. Yes, they might be able to get a strategic funding from their corporate as well.
Okay.
So I strongly recommend they will do that. Talk to all the capital guys in Malaysia.
Okay.
But again, yeah, if the home market is only in Malaysia, might be wasting some time to talk to global VCs. So
Okay. So
focus
that
on
would
the
be
local
that's
capital.
actually a very good advice because as a startup founder, you have a limited amount of time. You need to be raising money, but at the same time, you need to run your business. So you need to be focused in terms of the type of VCs or strategic partners that will be receptive to your business. And your advice is, if you've only got a domestic market right now, your best bet is go and find locally based or locally anchored investors.
Yes, and of course, some Japanese investor they invest in Series A stage in Malaysia.
Okay.
So, of course, I can introduce if
Okay.
startup would like to approach, but most of the case, yes, we have to depend on the local capital in Malaysia. So I really expect the Panjana capital will be very successful in Malaysia,
Okay.
and other fund structure is going to follow up from the government side and corporate side as well.
Okay. All
Yeah.
right. Koichi-san, thank you very much for taking your time to be on the show.
Thank you very much.
I'm Brian Fernandez, and I've been speaking to Koichi Saito, founder and general partner of KK Fund on BizTech's CEO Conversation Show. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please subscribe and like our Facebook and LinkedIn pages.